Hello everyone, I'm Charles Brown, Portfolio Manager with CB3 Financial. On behalf of StockCharts.com, welcome to your Daily 5. Today we're going to talk about portfolio management. I am a portfolio manager in Chicagoland. We're basically a family office that trades for our own accounts and for accounts of select individuals that want to trade with us side by side on what we're doing in our own trading in-house. You can check us out at CB3Financial.com. You can do a little risk questionnaire for 5-6 minutes, fill that out, and you can also create a financial plan if that's something that would interest you as well. Today we're going to talk about how we get these results. 28.8 so far this year, and that's after Thursday and Friday's sell-off. We're using stock charts to generate this, and I want to tell you about that now. Okay, so this is a chart of 4 major indices: the NASDAQ, the industrials, the S&P 500, and the Russell 2000. Now clearly you can see that the NASDAQ has outperformed this year. And my position on this is that we need to choose the strongest index as our benchmark. So our benchmark changes. Now our internal benchmark changes based on which is performing the best. And yet the index that our customers are judging us on is always the S&P 500 because that's what they're familiar with. But the NASDAQ 100 and even the overall NASDAQ composite has been so strong this year that it just doesn't seem fair for me to aim low and for low-hanging fruit choosing the S&P 500. And that's why I like this feature of stock charts. I can easily see how each of these 4 or 6 or 12, whatever number I wanted on here, how these benchmarks are doing. So we pick the NASDAQ to use to create alpha for our clients. That's just basically our strategy. So far this year to date, the NASDAQ's up about 26%, the S&P 6. The Dow Jones fell back negative for the year this last Thursday and Friday, and the Russell, of course, has underperformed all year. There's a huge 34-point gulf between the NASDAQ and the Russell, and that's why we're avoiding small caps. When we use the data that's in front of us to make obvious decisions like we're not value traders, we're momentum traders, we're relative strength traders, and we want to invest where the growth is in the market, and that clearly is in the NASDAQ. So even though the last 2 days, you can see obviously with the sell-off here, this is just showing the last couple weeks or so, we're not discouraged in wanting to change that benchmark at all. We're still measuring where we're going to get our alpha from what's happening in the NASDAQ 100, because that's where the big players are. Obviously, the mega cap stocks have been the winners. Now, that doesn't mean that this is a short-term chart here, just 3 days, showing that that got reversed. The Dow and the S&P actually outperformed the NASDAQ composite and the NASDAQ 100 here in this first week of September, the last day of August. But we don't let that discourage us. And that's because we have quite a few corroborating factors. So let's look at when clients come to me and say, you know, I'm really kind of scared about what I saw the last 2 days. First thing I do is remind them, you know, what happened in mid-Feb to mid-March of this year, basically from February 19th to March 23rd. But I'll show them this chart, and I keep this up as one of my default charts and stock charts. If you look really closely on the right-hand side, you'll see that red bar that basically represents the month of September. Now, we've only had a few trading days, 4 specifically, in September. But we use this to help clients get over their recency bias. If you can't see that, let me show you again. Lean in on your monitor. And you highlighted in yellow there the red bar. I mean, we all know it's there. But in the grand scheme of a 20-year looking back period, or even if you just take 10 years from 2010 or 2009, if you want to use 11 years, we're still in a position where this move that's happened is really not that big a deal. Still, though, it is the biggest contraction from a high that we've had since back in February. Still doesn't discourage us, though. Okay, so what's the next thing we look at? So we'll put in, and these are relative rotation graphs. You guys are aware of these are in stock charts, I'm sure. This is a tool I use a lot. Julius DeCampanaro obviously designed this. So I'll use the S&P, and then I'll look at growth versus value. I want to always make sure I know where that relationship is. So IWF versus IWD. When I look at the charts that I showed you previously, it's pretty obvious that growth is winning out over value. So I'll go in here and see, well, is value making any significant inroads this past week? And is this something I need to address for our portfolios? Well, I can see real easily on this relative rotation graph that even though growth is weakening, IWD, which is value, is not even close to being near the zero line on momentum. So at the current time, I'm not making any changes based on that. So let's go to the daily chart now. We can see that growth is weakening a little bit, and IWD is in lagging, actually. The Dow is in lagging. IWM is not even part of the game. So really all I'm trying to determine is, yeah, IWF on a daily basis is weakening a little bit with IWD making some inroads, but that's not even close to enough to make me want to change my portfolio allocation. Okay, so the next thing I'll do in the stock charts, I just love having these presets here for the RRGs, is look at the 11 sectors. Now, we've been weighted heavily in discretionary and in technology. So if you look on the momentum scale, you'll see that XLI is making some progress, maybe heading into the leading quadrant over there in the improving quadrant. But the truth is that industrials have had fake outs so many times, and they've fallen off from this, that I'm not investing anything significantly there. We remain pretty heavily concentrated in technology and discretionary, and this chart tells me, because as far right as they are on the ratio scale, that's where we still need to be. The other players, the defensive players in the sector spectrum, if you will, they're not even in the game. They're all hanging out in the lagging quadrant. And if we dig down into the daily basis here to see if anything's changing, it's really not. We've got communication. Okay, that's encouraging. We've got some holdings there, and I'll get to that at the very end of the presentation. But we've got discretionary and still technology, still farthest to the right on the RS ratio, and that's telling me that's where we need to be. If we thought that we were going to move a little bit into industrials based on the previous chart that I showed you, all we have to do is look at the daily here and see it's struggling. It's struggling on a daily basis in lagging. Now it's trying to make a move up, but the arc is so weak that there's just nothing to recommend industrials right now. So let's dig down into the holdings of XLK, and I see many holdings that we have in our portfolios: AMD, Apple, NVIDIA, obviously, CRM, LRCX, MasterCard is now leading, coming back into the leading quadrant. Do I see anything here to concern me? No, I don't have any holdings on the lagging quadrant area there, and I don't even have anything on the improving because there's still so much to choose from. So on the leading and weakening. Now, we don't like it when we see these long tails in weakening, but for right now, I just don't see an issue. We'll move into the daily chart to just dig down here and see if there's anything else here, if it's a flag. Still got AMD, Apple, NVIDIA, Adobe into it. Weakening a little bit. Broadcom, AVGO is there. All these are holdings. So basically, as we review this, we're going, not a time to make changes. So nothing that happened this past week is going to cause me to make a change. And that's why we're remaining, as of Tuesday morning when the market opens, we're going to be at 45% technology, 27% consumer discretionary, and the balance of our assets in XLC. That's where we are going forward this next week. Okay, so guys, thanks for being here. If you want to check us out, subscribe to me on YouTube. We tweet usually every day, sometimes twice a day. It's CB3Financial.com if you want to check us out. And I will see you the next time here on Your Daily 5. I'm Charles Brown, Portfolio Manager with CB3 Financial, where we don't just manage your assets, we become one of them.